Okay, welcome back from lunch. And today is Eid al-Adha, isn't it? So we want to have, yes.
It's also South African National Day.
Hey.
It's a holiday and I'm working.
Oh, you know, there are so many things to celebrate, isn't it? Okay, so we are going to make it like a mini skirt. What does a mini skirt do? We all know. Eh? What does it do? The what? The mini skirt?
It is long enough to cover the subject matter, but short enough for arousing us.
Exactly.
It also mimics how women dressed pre-colonial before judgmentalism crept in with religion.
That's why I love Honorable. Everything we need to look at, what does that mean? Is it right or wrong? Okay, done. Now we are going to start with a very short film, Nyerere telling us about the economy. Nyerere, what was the lady's name who was here in the morning, who told us about this area and Haulu. Haule. She told us about Nyerere, President Nyerere. They call him Baba wa Taifa, father of the nation, and he's one of those, Pan-African leaders whom we remember and whom we are really proud of. Who else? Who are the African leaders? Mandela, apart from Mandela. Sankara, Azikiwe.
Sorry, Jen.
Hey.
Out of respect of Nyerere, you can't put Mandela in the same sentence or paragraph or chapter or book.
Or even Sankara and Mandela. Sankara and Steve Biko, yes. Sankara and Robert Sobukwe, yes. Now we are talking.
Okay. So when we talk about Nyerere, what kind of basket, other people in that basket, whom do we put there?
I'm for women, so you can put Neanda there, Zimbabwe. You can put Mikatilili Wamenza. You can put Amanirenas, the one-eyed queen of Nubia who fought against the Roman Empire. You can put Winnie Mandela. You can put Santewa of Ghana. You can put Ioba Idia, the hidden Oba of Benin.
Okay.
You can put Vimpa Kinda of the Congo with a K. You can put a whole lot of women because, yes, yeah.
So what's coming out is that we need to know our heroes, isn't it? We do need to know our heroes, and I think Jason, that's one thing which is missing out of our data. Is it the Yoruba or Igbo? They say if you don't know where you are coming from, and if you don't know where the rain started beating you, you can't get out of it. So we need to be able to know who are our heroes, Some people tell us our heroes, we ask our young people, it's Napoleon and Bismarck, isn't it? So we need to know. And Gandhi and Vasco da Gama, who discovered and speak, who discovered what. Yeah? So we need to know our history. Okay, so Nyerere, it's a very short, but he's talking about the economy and economic policies. Please, we can start.
A developed country, but there is a tremendous commitment by the state. Don't listen to this nonsense that the state should give up the direction of the economy. It's nonsensical. And we have so many stupid leaders who think you can develop a country, that somehow you can hand over the development of your country to something called private enterprise, unregulated. Unregulated. Unaachia tu basi. Maneno ya kipumbavu. Nani wameacha? Who had done it? The Japanese have not done it, the British have not done it, the Germans have not done it. They meet, they will be meeting in Halifax in June, they will be meeting in Halifax. What for? To drink tea? What do you think they're going to meet, to do in Halifax? The big seven are going to meet in Halifax. To do what? To discuss how to control the economy. It's not a meeting of bankers, it's a meeting of presidents and prime ministers on the economy. And this ignorant people in Africa being deceived, don't leave it to the private sector. Where is the private sector? Where is the private sector in Tanzania to which you are going to leave this development of the country? Where is it? It needs nothing. It needs nothing before you can have it. Is it? So you nurse it. This is what the Asian countries have done. And they go on nursing it. So the Japanese did it. Korea, tough. It's only now they're beginning to open up their market. How do you open up your market to big competitors when you have no power to compete with big competitors? This is ridiculous. I mean, it's like, madam, I'm sorry. You know, in the world of boxing, yeah? In the world of boxing, there are heavyweights, middleweights, flyweights, featherweights, and although the rules are the same, you put them separately, in separate rings. The heavyweights in their own ring, you see? The middleweights in their own ring. You don't put in the same ring a heavyweight and a featherweight. Never! How do you do that? That is murder. It can't be called freedom. But that's what the big seven are telling us to do. That Germany and Burkina Faso should get in the same ring. And that is called globalization, freedom, liberalization. This is nonsense. This is absolute nonsense. You protect the weak until they become strong before they can compete. Always. This is the rule.
That was Nyerere. Huh? Nyerere?
Yeah. Now I'm asking, it's sort of like a joke, but the issue is about if he's from Tanzania, is he an African? Where is that gone? That was my question. Because now it looks like a surprise to many of us when we are hearing this language. Yet we are supposed to inherit the struggle and carry it forward. So it's a liability that we now have before us.
At the end of that video, there was Stanford Avenue. Maybe that's the problem.
There was?
Stanford Avenue. There was a sign of the Stanford Avenue.
Okay. Okay, so from Nyerere, there are fundamental issues which are coming out. And he's right. Where are we, That was Nyerere 2015. And we are doing the exact opposite. We are moving on. He talked, we listen, we move on, which is a pity. Okay, so there are things which they are fundamental. We protect the weak until they are strong enough to compete. It's the other way around now. You start pouncing on the weak until they are destroyed, isn't it? So and I find the way he explained about the economy, leaving everything to the private sector. And this is what Jason talked about, the PPPs, leave it to the private sector, leverage, the private sector. So we need to rethink what we are doing. On the issue of the nexus between trade and debt, we want to understand the debt and trade nexus. And I think the whole debate in the morning, the whole discussion was already about debt and trade. Talked about industrialization, we talked about getting jobs, employment. So almost we have been talking about that nexus of debt and trade. But what I want to emphasize is that when you look at the Sustainable Development Goals, the 2030, which they are telling us we are going to achieve in 2030, isn't it? You know all of them. They are how many? 17. That here we are going to achieve them. And also the Agenda 2063, which talks about what does it talk about? Agenda 2063. The Africa we want. A development agenda. When you look at all those key agendas, the issue of trade as a mechanism to achieve those goals is clearly stated, that we need trade to be able to achieve those agendas. Trade is also important. Either you trade or you do what? What are the sources of income, by the way? You know, at household level, personal level, at national level. How do you get an income? What do you do? But you can get a loan. This is what you have been doing, isn't it? That's an income. You borrow. How else do we get an income? Yeah, trade, whether by barter or by what. You exchange what you have to get what you don't have. It is trade. Which other way can you get an income? You get a loan, you trade, you do what? You can inherit, or you can inherit, you can inherit, you get aid, you know? So basically it's aid, you trade, or you get a what? A loan. A sponsor. I love the sponsors. You get a sponsor and you sit back and relax. But sponsors also, they have strings attached. So sometimes you look at those strings. So trade is really important. Trade is important, but if we are to have trade which can be able to enable us to have foreign exchange, to be able to exchange goods, to be able to have an income, then we need to invest in it. We need to invest. We need to invest in the infrastructure, in the dams to get electricity. We need to invest in the industries, but we also need to have a policies which are conducive to trade. And those policies can be financial policies. We look at that. They can be debt, the way you manage your debt. They can be industrial policies. They can be trade policies. They can be agricultural policies. So the entire spectrum of economic policies have to be right to be able to trade. So we need investments. That's the bottom line. We need resources to invest. But because we have shortages of resources, we are even borrowing to invest in trade. So our session, we want to look at, understand those linkages, and also to understand the impact of debt financing on trade and on the economy. And for me, I think the objective of this session is for us to be able to understand the interlinkages of our work, so that we can be able to support each other. we work a lot in silos. As somebody says, those things of debt, for me, I don't know them. I don't know debt. I'm working on tax. I'm working on tax. Debt, I don't know. You go to an organization called Afrodad, isn't it? You go to somebody working on debt, says, hey, tax, But there is an organization called TGNA. I think I can give you their number and you talk to them, okay? I think we need to reduce that silo, to be able to see the interlinkages of our work. You might not be an expert on debt to talk about those debt complicated issues, but you can be able to talk intelligently about the interlinkages and how we can be able to support each other. The impact of debt on trade. The first question I want to ask is, can we now do away with debt? Today, to say Kenya, we are going to advocate, we are going to do away with debt. No more loans. Is it possible?
That's what our president said when he was campaigning.
That's when, the other time.
Yes, but now.
But now.
Yes.
But you are amassing more and more loans, isn't it? Is there a country which can, even for us, to say that we want our countries to exit debt, to get out, to stop loans? Can we? No. When I look at Uganda, our structure, the budget for 2024-25, maybe Hilda, you can tell us, it's so many trillions and the percentage of debt.
Debt servicing?
No, the structure of our budget, that the total budget is so much and this is how we are going to finance it.
So the deficit, definitely, I've heard someone talk about the deficit, but before the deficit, the structure of the budget, it's divided into sections, the discretionary and non-discretionary spending, whereby the discretionary resources, government can flexibly reallocate to various sectors or various interventions, or the non-discretionary part, these are statutory obligations government has to meet. Yeah, including debt, but of course with several other project monies that are tied and the donor says you have to allocate it to this. But for the non-discretionary, it's about 47% of the financial 2024 budget. And we see that this is going to affect the level at which government can flexibly allocate money to various social sector spending, but also on ventures that can spur development to enable us to pay back debt. But the most interesting part about this coming budget is on what they call the domestic debt, whereby increasingly government acquired a lot of money from the domestic market and they are out of cash. They don't have enough cash to clear the maturing debt securities on the domestic market. So there is what they call the debt rollover. So government simply either borrows to pay the current bondholder, or they go back and renegotiate that on more expensive terms. So this is about 19 trillion out of the 72 trillion budget, Ugandan shillings. So this is quite huge. Yeah.
Okay.
For the fiscal deficit, it has reduced to about 4.5% of GDP from the previous 7 point something during COVID. Yeah.
Okay. Yes, please.
Thank you, comrade. I want to go back to your question of whether there is a country that can stop debt today. I think a critical analysis of that is we put ourselves in that situation as the continent. what you said about us knowing our history. If we go and listen to everything Nkrumah said, and by the way, it has been quantified, only 3% of what Nkrumah told us has been implemented. So we don't need to be inventing anything new. We can just go back and implement. So if at personal level, I live a high life, I drink whiskey worth a bottle of 3.5 every weekend, I dress at boutiques, my furniture comes from boutiques, and that overhead far outweighs my income, I am going to have to live on that. So we can't stop that because we have tied ourselves to neoliberalism. I believe we can stop that if we can relook at our socio-economic policies as a continent and do it together as a matter of fact. So, yeah.
Okay. Okay. So, we also look at that. How do we look at exiting debt and what needs to be done? Public debt is a double-edged sword. It can cut both ways. Like I said, it can provide revenue to facilitate our investment, for us to spur trade, but the debt burden undermines our country's effective engagement in trade. How is this? The unfavorable loan terms, and this, we have already covered this, unfavorable loan terms, the high interest rates, the resource-backed loans, we have looked at them, you know. So the way the conditionalities are put to us undermines the way we trade. And then also when you look at our debt, it's channeled to non-productive sectors which don't spur the economy. It doesn't spur trade. And that means we need to rethink, where are we putting our resources? Where are we putting the loans we get? Is it in the boutiques or what? Where do we put our resources so that we can generate more resources? We call it a return on investment. And I think as governments, we need to rethink, to think as the private sector. Where are we putting our money?
Thanks. I wanted you to reverse to the previous slide. Yeah, the previous one, the double-edged sword. Oh, it's moving forward. All right, sorry. But I just wanted to echo, I think, to echo what Joab has been saying. So, yes, you have put 2 layers there, but there's also another 3rd layer, that debt itself by nature. It affects also the structural priorities of our economic growth. Because you might now be seen to be trading more, but if you look at the fundamentals of that trade, they are not structurally aligned to promote development. So you can have trade, it can be robust, booming, but at the end, it does not yield the development that you want. So it's another layer.
Exactly.
Yeah.
I have a question on that last part of aid largely channeled to non-productive sectors that do not spur trade, and where you talked about return on investment. But if we are saying that this debt should be allocated to things like public sector that are not necessarily for profit, then how do we reconcile that too? Like Mkasiri is saying, development in what terms and whose kind of development and on what level? If you could expand on that.
When we, in trade, we need to look at the drivers. What are the drivers of the economy? Then we look at also what are the enablers for the drivers to drive the economy. You know? And so we need to look at the drivers of the economy. If, for example, we say industrialization, is the driver. We need to industrialize, we need to add value, we need backward and forward linkages. What are the enablers? The enablers are infrastructure. We need the infrastructure. So on its own, infrastructure has to, you can think it can't give you a high return on investment, but it's an enabler for you to move your goods, isn't it? So we need to look at it that way to ensure that it's a public sector, but it can also assist in helping the economy to grow. Okay? Don't know whether I have made sense there. Okay. Hey, we are supposed to go back. Help me to go back to the previous one. Aha. Okay, so we are looking at those unfavorable terms. So we are saying that when you look at the debt, the conditionalities around debt, even when you are getting that loan, even when they are talking about debt suspension, even if you are getting debt relief, there are conditionalities around that. And most of those conditions are trade economically related. Open up that sector, sell that. I remember in Uganda we are looking for a loan. They told us you have to sell your commercial bank, the government bank, like here, the KCB of Kenya. We had a Uganda commercial bank. He said either you sell it or you don't get the loan. And those people who were negotiating said, okay, we sell it, you know? And how do you run an economy without a bank? Without a bank. Because foreign banks, what they do, and it goes to the sectors. Foreign banks, what they do, they collect all the money from you, from me, from everybody, then they lend to us, then they are lending to our government. Like I was asking on the domestic, when we are borrowing on the domestic market, Standard Chartered Bank has started lending to our governments, but whose money is it? It's our money. And you put it there, and you are happy it's there. Sometimes you don't even get interest because it's a current account. Your money is there, and they are lending it to us. You know?
And sometimes it's just the government's money that they're lending back to government.
Exactly.
The government is banking with them.
Exactly. And they are also lending to our governments because of the treasury bills and all that, the bonds, you know. And they prefer, you can keep your money there. They won't give you a loan because they prefer lending to government because it's risk-free. They sit back and wait. And if you don't pay them today, they roll it over with more stringent terms attached. So that's where we are. So for any loan, there are strings attached, and those strings are hurting the economy. There is also the issue of austerity measures. You know? Hello? Yes, please, dear.
Going back to the point you made about Uganda being told to sell, was that your reserve bank you were told?
No, not reserve, commercial.
Oh, the central one?
No, commercial bank.
The commercial one?
Yes,
okay, all right.
So other conditionalities are austerity measures. We have seen them, they are back. Reduce on education, reduce on subsidies on that, on health, you know, austerity measures are back. And without human capital, without a human capital, you can't develop a country. We have seen the old structure adjustment programs. You know, some people, when they talk about structure adjustment programs, it's like it's history. It ended in 1979, yeah, it ended. But the structure adjustment programs are still with us, you know. They are stronger. issues of privatization. When we talk about PPPs there, that's privatization in another form, you know. Issues of trade liberalization, they tell us open up, liberalize. And this is what we are talking about also in the Continental Free Trade Area, you know. Concentration on liberalization, liberalize. But for Uganda to liberalize the same as South Africa, that's also an injustice. Yeah? Just because it's an African continent, we need to rethink what kind of liberalization are we talking about, you know. Issues of deregulation, government getting out of development. And that's why even in the economy we are saying, private sector, what Mwalimu Nyerere was talking about, we are leaving it to the private sector led, private sector growth, you know. So those are, but there are also conditionalities. The issue of FDI, foreign direct investment, they have also told us attract investments. And now we have been conditioned to think that it's an investor who can help us to grow our economies. And when you look at in Africa, apart from South Africa, I think it's the only country which reviewed their investment code to be able, for example, to put their performance requirements, you know. Performance requirements is when you get an investor and you say, you know what, don't invest here. Don't invest in coffee growing. Invest in a higher level in the coffee processing, you know. So we don't put any conditions, you know. We don't. We don't tell them provide decent jobs. We don't. They come and we say any job is good enough. And they will tell you, I'm employing so many people. South Africa is the only country which said when you come in, if you want contracts from us, you tell us how many black South Africans you're employing at all the levels until the top. As other countries, we don't. Yet, let me give you an example. When it comes to employment, for example, most countries don't have a minimum wage. But when you give your people a minimum wage, that means government is getting pay as you earn. Isn't that an income to a country? But you find now the whole issue of casualization of labor is rampant. Casualization of labor is where employees are not given a contract. They pay you on the day you work. If you are sick too bad, you are not paid. That's casualization of labor. And it's happening in the gig economy, the IT, those platforms. We have also seen where they are temporary workers. There are these agencies who, like now, if this place here, they want workers to clean and to do the compound. They don't employ them directly. They will tell a company, you want cleaners, outsourcing. So the other company will bring the workers and they work. And this company pays the other company. So the workers are in between. The workers are paid by the other outsourcing company. But they are not employees of that company. They are neither employees of this company where they are working. You know? Completely casual. And that's how we see our economies working. The challenge there is that government doesn't even get resources at all. And government continues borrowing. There is the issue of the EPZs, the economic processing zones, and the industrial parks. That's also another industrialization model. And we are saying we are industrializing, you know. In the EPZs, It's like an oasis in a desert. They don't pay taxes, they don't do what, they don't care about the workers. Sometimes they bring their things and just put them together, you know, which is also not really good. But I want us to separate industrialization and structural transformation. What's the difference? Industrialization and structural transformation. When you read Agenda 2063, it talks about structure. The Africa we want is structural transformation. But we have reduced it to industries. And then there is somebody will give you a list. We have 250 industries, you know, and so many workers. What's the difference? Structure transformation and industrialization, yes?
I said I'll try. Whenever we say structural, we are talking about a system overhaul, which means it will be built into your budgeting process, your plans. You own it. It's part of you. Industrialization can happen not at your terms, and it can happen in a tiny sector. I mean, I think South Africa is a good example. I mean, you can get off at OR, get onto the Gautrain, go to Sandton, leave from there and go back, and you would not have seen the real South Africa. You would have seen that tiny industrialization, which is a white pocket really intended for the same investors, so that when they come, they don't see the poverty that will make them feel guilty. You know, they live in that first world within an island of poverty. So industrialization, for me, should be a part of the structural.
Exactly. Yeah. Okay. Any other addition to that? So, Job.
I think now wearing the hat of the economists, though I'm not an economist. Structural transformation from a productivity perspective, it's looking at, you know, how you transform the structure of the society, the structure of the economy, mainly from, you know, you'll say in Africa we have low productivity, but also very labor intensive. And so transforming that into high productivity, but with skills intensive. Yeah.
Okay. Good. Okay. Any other addition? Yes.
Merci beaucoup. En fait, si on questionne un peu la théorie économique, c'est-à-dire qu'aujourd'hui, ce qu'on appelle l'industrialisation donc, est un aboutissement de la transformation structurelle de l'économie. Parce que si initialement, on a une économie qui est essentiellement basée et portée par le secteur primaire, donc le secteur primaire en se développant et en augmentant la productivité justement dans le secteur primaire, cela permet de libérer de la main-d'œuvre qui va migrer vers le secteur industriel. Également, le développement, cela va permettre au secteur industriel de se développer, également de passer à un niveau supérieur, c'est-à-dire au secteur tertiaire. Donc voilà un peu du point de vue économique la relation qu'on peut trouver entre donc, la transformation structurelle, qui est un processus qui nous conduit justement à l'industrialisation. Merci.
Okay. I think we have.
I think I would add, in terms of structural transformation, it would also be looking at the socio-economic aspects and not just the economy and industrial boost, but also looking at, I think you had earlier talked about human capital, human development, are people happy, indicators like that, apart from things like GDP and those other numbers. Yeah.
Thank you. I'm reminded of Lee Kuan Yew's statements in which he said, and people didn't understand him at first, but he said, we will also look into how you behave and legislate against things like spitting in public, all the way to the education that you receive, how people live in terms of residential areas and so on, so that when LG, the company, Samsung and all those emerged in those 5 tigers, it hasn't fallen from the sky, but it's Singaporeans, it's citizens of those countries, South Koreans, who have built these industries and they can relate to them. Today, you'll see a GL or Mercedes or BMW, whatever, on a highway, and someone will throw out, after drinking water or something, or banana peels, someone will throw them out. So this person is driving a 2021 vehicle, but the behavior is from a different century. So structural to mean transformation, not just in material terms, but also in the human capital, the cultural sophistication of that population to relate to that level of development.
Okay, okay. Francis.
Yeah, just to say that I agree with what colleagues are saying, but to also put it in two terms that all of us may understand. I think structural transformation deals a lot with the software, looks at the people, looks at the institutions, it looks at the economic underpinning of what we seek to see as the changes. And then industrialization, I think, is something we can call the hardware, the outcome of several things that we do. And then we see the industries, we give them the land, we see the FDI coming in, but the structural really deals with the software, and then the other bit of industrialization is the hardware bit. Thanks.
Okay, thank you so much. I think we now have an extensive idea of what the structural transformation is. That is a fundamental transformation. And if we are talking about economies, it's a fundamental transformation of our economies, you know. And when you look at what we have today, you know, it's that the link, you know. I see, for example, in my country, we want to manufacture cars, you know, but we can't even add value to our cassava. But we are assembling, we call it manufacturing cars, and we are happy. And in this budget, they are saying those who want to manufacture EVs, electric vehicles, they have been given exemptions, and they will be given incentives, but we can't add value to our coffee, we can't add value to our cassava, you know. And the rural areas are there, you know, and here we are looking at EVs, electric vehicles, you know. So that kind of disconnect between the entire economy, what we are, but that's industrializing, by the way, you know. And they will say, yeah, that country is there, they have so many industries. They have, they are assembling cars, they are making electric vehicles, you know, but the people are poor, the people are jobless. See you.
Yes, thank you, Jane. I think as you are speaking, something ran through my mind, picking from what a colleague and Francis said. And of course, something that has always crossed my mind, in which the structural transformation that we're talking about is actually economic, developmental aspects. But sometimes we try to separate it from our thought processes, right? Development itself is a philosophy. It comes from the mind. The way we want to go with development in terms of the behavioral aspects. So what actually comes at the end, it's like a meal, right? There's an input here, and then you get an output. the input, it's not just about the investments, capital investments that we make, but also the human investment in terms of our thought processes, in terms of our philosophy. So I'm just saying this to buttress the fact that structural transformation actually should not just be viewed in terms of what Francis called the hardware, right? But also the software, because it is this software, it's this thought processes that runs or produces that hardware, that outcome. And so if we really want to think of structural transformation comprehensively, we should then just cultural aspects, those soft aspects of it, those behavioral aspects of it, because we talk about governance challenges, sometimes it's not, it's human behavior, right? So I think in terms of describing that structural transformation, it's good to give it that holistic view. I was just saying this just also to add to their voice. Yeah.
Thank you so much, CEO. And I think we need to, in that input, we need to include their issues of ideology. What do we believe in? So that we ensure that what we get out, addresses those issues, even of human behavior, So issues of ideology, those software, we need to include it there. But at the end of the day, what we are saying is that structure, overhauling the entire system. And this is really, really important, because where we are, the economy which is in place can't allow us to get out of poverty. It can't allow us to exit debt. And that's the bottom line. Another issue which I wanted to talk about is the issue of the financialization of the economy, Again, we are combining the issues of finance and issues of the economy. So what's the financialization of the economy? When we talk about financialization of the economy, or just financialization. Oh, see, Mkasiri.
Thank you. So I'm gonna share a bit of trying to simplify this in accounting terms. Basically, there are 5 forms of assets that we're talking about when it comes to development. The first one is your natural capital. It could be about the air that we breathe, the rain, the land, the minerals, everything that's natural. The second issue is about the human resource. The third aspect of it is the relational capital. We are seeing the differences that are there to the treatment of the war in Ukraine, Russia, and the war in Sudan. And the manner in which those relationships manifest is some form of capital, which can determine how, even when you are borrowing, when you are saying lack of concessional funding and everything, it also speaks to the nature of the relationships that we have internationally. So the relational capital also comes into the mix, also your soft capital. Your net worth is determined by your networks. Then we talk about now the financial capital, and then maybe the technological capital being the fifth. But of all these forms of capital, you are now saying when you talk about poverty in Africa, it's because of the dollar. It does not matter how resource rich you are called poor, because you do not, in financial terms, you are nothing. When you have got a young population that is set for a demographic dividend and their populations are aging, you are called still poor, because that does not count for anything. I will not go on and on, but I will just say it's a system now that you have made sure that all other forms of assets beyond the financial lens do not have value. So we can't talk about DRC as a rich country because financially it is impaired. So this is how I would put it.
Thank you so much. And that's really interesting, because we have allowed them to define what we have. The demographic deficit, it becomes a negative, yet it's capital. It should be a plus for us. But the way they are saying you are too many, and then we start saying, hey, we have a problem. We have too many young people. So rethinking what our resources, which we can be able to leverage on to be able to address our challenges and get out of that debt trap.
I would say financialization of the economy is also allowing a certain narrative when it comes to development. So having financial institutions like the World Bank, like IMF, and wealthy people, and things like markets and liberalization determining what the economy is, who is valued, who dies, who is collateral damage. So just letting people in the World Bank in their suits and AC determine what happens to an African child in the rural areas. So just allowing a certain group of people to then make decisions that affect the whole ecosystem.
Financialization?
Yeah, I think over time, and this has been mainly from the 70s, the private financial sector has become embedded into the main economy. It's like the one running the main economy. And you see situations, for example, I'll give about maybe three examples to explain that. The current trading in foreign currency is about 100 times the trade in goods and services. It's part of the financialization. When you look at the assets that are today held as derivative contracts, you find that it's about 3 to 4 times the global. It's amounting to about $640 trillion actually, and that's like 4 times the global assets. When you look at, Jason talked about, the hedge funds, like the assets that BlackRock controlled, and their BlackRock is one of the problems when you're talking about debt, but the assets they control, like I have statistics for 2019, was about, I think, $7 trillion, more than the amount that is required to actually achieve all the SDGs. So the process through which the private financial sector has become embedded and now defining what the economy is. That's very true.
It's not just embedded. It is the economy.
Thank you, Jane. It's just to agree with him and add that, to bring it to a picture. Financialization of the economy would mean we forget. I would take it in the perspective of trade. When we trade, we have something that we sell, and then from what we sell, we'll get an income, right? But now, rather than looking at the economy in terms of the kind of real asset or real good that we have, we are now looking at it in terms of the value on the capital market. And that value on the capital market sometimes is far from the reality. As he was saying, people would take your real value, the real value of your economy, and make it a different thing in terms of financial perspective to go and fetch for financing. So you get to a point where the reality of your economy is no more what you look at. It's like gambling. The value that you see is not really what you have. Yes.
thank you once again for the opportunity, Jane. I think I want to go back to Joab's point. It's very interesting, Joab, because it has a date and time. I love history, because history makes you realize why you are where you are now. Because towards 1944, towards the end of the Second World War, any economist who would have articulated neoliberalism was deemed an anarchist. It was called anarchy. But capital worked silently, you know, and by the time we blinked our eyes, it was financialized. The whole economy was. So I'm saying this for us to realize that it's not a mistake, it's systemic, it's planned, which is why reserve banks are privatized. So anything that we are going to articulate away from neoliberalism is a struggle and is a war. And I think that's why Agenda 2063, unless we are going to fight for it, Comrade Jen, as you mentioned, it will just remain that, an ideal towards which we strive. It could be another 200 years, it would sit as an ideal, because they brought us here on purpose to control and to maximize. And I think the three tenets of neoliberalism scare me. I don't know if it scares other people, but the first one that says the government is a post office between capital and the people, which is where deregulation and all these things come from. So in essence, they are telling us that vote for government, but please understand, government is here to serve us and put you in line and make sure that capital flows, which is the second tenet. Let capital flow, which is where the tenet of free market comes from. So if you look at the whole concept of neoliberalism, I don't know, I think we don't have enough angry young Africans, or maybe they don't understand, but I don't know why we are letting neoliberalism really saturate, you know, into African economies. So.
Maybe just to add on to that, how did it saturate, you know? When you read, you can read a book by, some articles by Susan George, Susan George, on neoliberalism. And there's also another one by Klein, the shock doctrine. You know, maybe somebody can write them here, the shock doctrine. It looks at how neoliberalism came about and how it was entrenched, you know. And Susan Joy says, like Honorable you have said, you know, when neoliberalism, the ideas were put on table, everybody was saying, are they mad? Are they mad? How can you talk about deregulation, privatization? It can't work. So what they did, they went into universities, the University of Chicago, these, you know, and it became like a religion. Now for us who are saying, no, you are the one who is mad, because the other one has entrenched itself. So when we are talking about all these issues of debt, we need to see what are the root causes, and we need to be also what you are saying is true. It has to be a real fight, you know, fighting in the boardrooms, in the universities, because it's also an intellectual fight. It's ideological, you know. So it is not an easy fight, you know, and we need to be aware of this. But we need also to be aware of how we can be able to recognize that this one, you know, it has to be incremental, be able to say, here we need to change. That one on FDI, we need to put a law in place. That one we shouldn't agree. So it has to be incremental, but it won't be an easy battle.
En fait, je voudrais répondre à la question, c'est quoi la financiarisation de l'économie, en donnant un exemple. Chez nous, on a un secteur informel qui est très développé. Et je donne l'exemple d'un éleveur qui a du bétail. Et du point de vue économique, cela a de la valeur pour lui. Mais s'il doit utiliser ce bétail pour aller acquérir un financement, ce n'est pas possible pour lui. Donc pour moi, donc de manière simple, la réponse à ces questions, c'est quand on a des biens ou bien des services aujourd'hui qui n'ont pas une valeur financière et dont on ne peut pas justement intégrer au système financier actuel. Pour moi, c'est la réponse simple que je donne à cette question. Merci.
You know, that issue is really interesting. How many minutes do I have? 15. Okay, let me be quick. That issue is also very
Jane,
important.
1 minute.
Which? You wanted to? Okay.
No, yeah, I just wanted to, because Honorable was talking about, you know, how these things happened, but also looking at the opportunities that are there now to challenge, you know, the whole neoliberal ideas and concepts and what is happening currently, especially when you look at, you know, those who've been selling neoliberalism as the thing, you know, let the market be the decider, the demand and supply. It's the same people that are currently now retreating, you know, when it comes to what some of you call critical minerals. You know, previously, it was the market that provided for critical minerals or for any minerals. But right now, what we are seeing is that the developed countries, as government, they want to play a bigger role than the market, than the companies that belong to them. So is this also the moment to start highlighting these issues as civil society, as activists, as anti-neoliberal, like challenging them the way they are now behaving? Why can't they let the forces of demand and supply control the critical minerals? You know,
That's very true. On the issue which has been raised about issues of collateral, you know, financialization, the capitalists want to harness everything to get a profit. Everything is profitable. And the issue of collateral also came up. I want to give an example in Uganda. World Bank started a project for giving people land titles on communal land. Is that a communal land? No, you can't develop because it's not economically viable. You don't have a title to be able to get collateral. And we said, no, that is not right. This land is communally owned and it can be used. Said, no. No. So they brought we got a loan, brought a project. I won't go into the details about the women, the way the women were marginalized, because they said the titles are going to the men. But now, land became a commodity. Because I have a title, I sell it. You know? So that's financialization, you know? And now they have been selling, you know, that land. So the entire issue of financialization is very important. Let me go to the way forward. How do we exit the debt trap? How? We need to think. And our thinking, because we can look at what's happening in the debt, issues of debt restructuring, issues around the framework, the DSS what? Yeah, initiatives, which is okay. But if we are going to exit the debt trap, we need to widen, broader, look at our economy. And we need to link the financial architecture to the real economy. And I think this is what we have been talking about, no? And I liked what Joab, you said about financialization is about money. We are selling money to get money. You sit there, you sell the bonds. You color them, the blue bonds, the yellow bonds, the green bonds, and money comes in. They are black bonds. You know, I haven't had the black bonds, but they are coming, you know, because they have the orange for the women, They have the blue for the sea, and the water. They have green for the environment, you know. So the colors are coming up. But that's money. Money we are selling, and that's where the money is, by the way. Even in our banks, now the banks are also sitting back. They are selling money. And we look at the microfinance. You know, these vices go down. The microfinance in the villages, they also sit there, somebody has their money, and they start commitment fee, what, you know, and they get money, you know. And there is very little money to the real economy. But if our countries are going to develop, we need to invest in the real economy. We need to rethink our policies, trade policies, economic policies, industrial. Joab, what you have said about other developed countries rethinking their policies. They are retreating, they are going back. They are the ones who told us, liberalize, don't worry about industrial policy. Why do you need industries when you can be able to bring things, value-added products, and you bring us raw materials, you bring the value-added products, isn't it? Open up, liberalize, you know? But now, with the critical minerals, US is recalling all their industries, but it's also competition with China. They are recalling their industries, the EVs industries. And they are telling them, if you have your factory in Mexico, you are not going to get any incentive. And we are going to tax CBAM. We are going to tax those things you have produced there. But if you come back here and put up your industry here, you are going to get incentives. And they also give incentive to the industry, but incentive to the consumers. But they are telling us, open up, no industrial policy. So we need to rethink. We need to rethink investment. What kind of investors do we need? Those who can be able to grow the economy, provide jobs, pay taxes, you know? We need to rethink the capital. We liberalized our capital account. Money comes in, money goes out. You know Belafonte? He just passed on, Harry Belafonte. Look up his song on There Is a Hole in the Bucket. It's a very interesting song. Liz is saying, hey, Henry, there is it's Henry who is telling Lisa, there is a hole in the bucket. And Lisa is saying, Henry, please fix it. Yeah? So we need some Henrys to fix those holes in the bucket. Our bucket is leaking. Yeah? And they told us, open up your capital account. You go to Europe today, they ask, how much money do you have? How much money are you taking out? Yeah. You know? But for us, it's, they make it, it goes away. They haven't, and you really wonder, why do you want investors? They come in, they don't give us jobs, we give them the land, we give them the tax incentives, the tax holidays. In our budget for last year, we lost about how many trillions on just tax incentives and exemptions. But no jobs, and in our investment code, you take out whatever you take out in convertible currency, whether you want dollars or pounds, yet you have made that money in Uganda shillings, not dollars, and you get dollars on the market, you know. So we need to rethink, and we need to agree what are the drivers of our economy. Our drivers is not finance. Finance is an enabler. But what I have seen, again, when we are looking at reforming the financial architecture, and I have participated. For instance, you have seen me there, I have participated, but I always ask, because when you are reforming, you have a purpose. And the purpose has to be behind your back. But the way we are handling the reform of the financial architecture, it's like an end in itself. But if we say want to put money on the real economy, to structurally transform our economy, the reform of the financial architecture should be linked to that. And the reform of the financial architecture and the reform of the debt architecture should be linked to the reform of the trade architecture. So they have to go together. But knowing that the driver is the economy and finance is an enabler of that, not finance being in the driver's seat. I wanted to put a question mark there, on the first one. Africa is starved of resources to finance its development. That's a question mark we need to address. Are we starved of resources? No. No, we are not. But what's the problem? If we are not starved of resources, why are we indebted? Huh? Why? And Mukasiri, you talked about it. We have all these, the young people, we have the minerals, we have all these. We are not starved of resources. But why are we? Maybe those are issues at the back of your mind, but you can't.
Yes, I won't try to answer that question directly. But just as a contribution, and this was actually a question that I was going to present in terms of are we seeing us as a continent getting out of this vicious cycle of fiscal and trade deficits that reinforce each other and create poverty along the time anytime soon? This is because you said we need to rethink our economic policies, for example. The policies are sometimes rethought, but not implemented. You will see a country revise its development strategy and simply abandon it because no one will fund it. And as someone was commenting here, our other resources, our natural resources, our human resources are not being, I would say, optimally utilized to promote growth. And this is partially because our regimes, our political leaders, our leaders, will always see the things in short term. Economic growth, developments long term. They are worried about getting resources now to finance the political settlement at that time. They're not worried with this long-term perspective. So are the conditions there in terms of strategies? Yes. But if the guys that are running the system are not concerned about that, things won't change. Yeah.
That's very true. But maybe lastly, I wanted to say that issue have raised that people who are not worried about the long term. Our president in Uganda said that you for me, I'm 80 years old, I'm dying. For you who are still here, it's up to you. He doesn't care. So maybe again, we need to look at also political, all those political issues. Who is in the chair? Who should be worried about 20, 50 years time? Yes, the other, Martin, and then.
Thank you, Jane. We are not starved of resources, but we are wrong in the way we mobilize the resources. And this is where the problem is. How do we mobilize the resources? Even in the narrative, many of us, when we discuss domestic resource mobilization, we always think of the way we do taxation, which is completely wrong. You don't start with taxation. You must first see how you use your resources, transform them, and make that a living economy. And then you start doing taxation. And this is where we are always wrong, because If you go there, all the spaces where they discuss domestic resource mobilization, you will see subtitles are, tax this, tax that, tax that. Even our governments, when they go to discuss these issues, they will always think of coming back to restructure their taxation system. This is wrong. You don't start from there. You start from how do you organize your people to produce and generate incomes from what they produce and transform. You cited Singapore a while ago. How did they do that in Singapore? They have a whole institution which is in charge of making sure that small and medium-sized enterprises are created within the country and making sure that whoever comes with, how you call it, foreign direct investment will have a process whereby domestic enterprises are part of the game. So we don't start from, so we are wrong in the way we mobilize the resources that we already have to turn them into something that helps us be strong economically.
Okay, I just wanted to add two things. I think in my view, another thing that we need is increased collaboration amongst our countries. I think from my observation, like we have single countries, they are focusing on their own interests. So we are talking about the industrial policy, for example. I can bet my life for it that there is no single country that can achieve a sound industrial policy that is transformative alone. We will have to collaborate, right? We are talking about the value chains and all of those, even when it comes to critical minerals. So I think one of the things our political leaders especially is that can we collaborate as Africa, for example? So we'll have my single country, for example, Zambia, will focus on our own interests. I think earlier we were talking about even the international tax. We have been talking about the UN tax convention. Other African countries, secretly, they are pushing a different agenda, you see. So I think there is that aspect of collaborating. What do we want to see Africa, even in terms of the industrial policy? Can we have, Africa in mind that we can develop, like what we have seen in the EU, for example? The countries in the European Union, they collaborate and they are moving towards a single vision. So I think we need that for Africa, as opposed to isolating ourselves. So we have this country there just going to meet even the Western leaders secretly. I think that will not help us. So I think it's part of the problem. We can borrow, whether externally or internally, but as long as Africa, we don't unite, it will be very difficult for us to come up with an effective industrial policy, but even the economic transformation we're talking about. For example, not to shoot down on Tanzania, when we're just coming here, just to get to this final destination, what we had to go through, you take off your shoes here, sometimes even 3 times, I think all of those bottlenecks, we'll have to make sure that we get rid of them. It was in Nkrumah some time back. I think I wasn't born then, but he called on Africa and that we need to unite, that in a way that if we can become one as Africa, I think it will be a very good step in moving forward. But as long as we are isolated, so what will happen after this meeting? We'll go back to our individual countries. But our leaders, they're just focusing on their little corner because I'm governing 20 million people, those who have more 30 million people. But I think we need to stick to, we have the African Union vision and all of those. So I think it's up to us to call on our leaders that we need to focus on that.
Okay, that's really important. But maybe what we need to look at, because the institutions are there. For East Africa, we have the East African Community, we have SADC, we have COMESA, we have ECOWAS, we have Africa Union, we have the Continental Free Trade Area. So how can we perform better? So that's what we need to look at. They are there, but how can we perform better? So 1, 2, 3, and we close. I see Johnny looking at me.
Okay, thanks, Jen. Since we are discussing trade, and it's just something to think about because it's something that's happening currently, especially in the climate and energy space that Jason was talking about. Jen mentioned CBAM. The EU came up with CBAM, the Carbon Border Adjustment Mechanism. I think we might want to talk about that maybe separately. But what's the implication of CBAM on Africa's trade? already statistics are showing that it's going to cost Africa about $25 billion every year in terms of trade loss. And we saw that the EU came up with CBAM, the US came up with the IRA, the Inflation Regulatory Act, and the UK is developing its own CBAM to be implemented from 2027. So that, when we're discussing trade, I think we really need to look at what's happening there also. But also in terms of trade, with what's happening with this whole energy green or the EU-Africa green deals and stuff, we're seeing a situation whereby developed countries are coming to invest, mostly it's green hydrogen. They're basically taking over our waters. Yeah? When you take an example of Namibia, where Germany is actually investing in green hydrogen, and then also setting up the green industrial parks. I just want to so that you see how these issues are connected. Setting up green industrial parks, and then moving middle-sized German companies to operate in those green industrial parks. Produce or manufacture goods in those parks, which will be called green goods, export back to Europe. They are German companies, so they'll not be, because they produced them in a green way, they'll not be liable to the CBAM tax. But you, who has no access, you'll not be able to sell to the EU market. So this is going to be the next frontier of, I'll call it like a trade weapon or an inflation management tool. So as we're talking about debt and trade, I think how the rest of the world is conspiring to keep the world, to keep the rest of us in the same shape and form, in the same structure, how the rest of the world is conspiring to continue with the extractivism that has been going on for decades. I think we really need to follow that conversation and see, as Africans, what we need to.
Thank you so much. So for me, I believe as Africa, we have the resources, but I think corruption is becoming a big elephant, that there is lack of transparency and accountability when it comes to how we utilize our resources. I think if there is improvement in governance, we can put our resources to more efficient use. Thank you.
Yeah, so I think since morning we've been talking about how this economic structure is something that Africa was not part of, even in terms of formulation. So how are we expected to, and picking from Nyerere's video that you shared, how are we expected to negotiate or have like a level playing field within something that was not even created with us in mind or created for us? So my worry is, if we talk about reforming some aspects, when, like you said, there's a hole in the bucket, are we just not like running around like a hamster wheel? It feels like we are just running around like a hamster and not exactly tackling what the actual issue is. And it also feels like, as Africans, we are always coming into conversations or to the table late. For example, conversations like even digitalization. And I had hoped maybe you'd speak about like the AFCFTA and how, if that's a route that we should actually take, or if it's something we should actually pause and first think about. Because I know earlier this year the digital protocol was released, but some of the provisions in that digital protocol are things that we had copied from the US and EU, which they have already looked into and said, oh, these are not things that actually work. So we are always coming late to the table. So do you think that this is still a table that we need to be talking about and negotiating and reforming, or should we rehaul it and say, okay, this, as Africa, this is the economic structure that we are going to follow, and like fuck everyone?
No, we can't. We can't afford to sit back. But there is a lot going on. Francis will be able to tell us about the UN Tax Convention. You know, we are there fighting. And I think we need to fight harder, mobilize more. You know, Jason.
Allow me to stand here. I think also, just to add to what Jane is saying, the lamentations and frustrations are valid, and it's okay to feel that way, to feel a little bit exasperated by some of the information that we're sharing today, or some of the news that you come up against on a daily basis. But we must also be optimistic about what lies ahead for us as a people, for us as a continent. And remember that many of these fights for liberation, for sovereignty, they take decades, and multiple decades. Independence from colonies and the colonizers was not done in 1 or 2 years. It took several decades. And I think we are in a particular space right now when you talk about trade, tax, debt, digitalization, and things like that. We're in a very good space. Just take, for instance, within the UN system, I'll leave the tax convention because that's TGNA are going to take us through that. But we are starting a journey towards the 4th Financing for Development Conference. And Stefano will talk about this a little bit more tomorrow afternoon. But if you look at the number of African countries that are either chairing, co-chairing, facilitating, or co-facilitating this international process, it's huge. You've got Burundi there, you've got South Africa there, you've got Egypt, you've got Kenya, you've got Ghana, you've got Namibia, all sitting in these very influential spaces that convene the rest of the world to discuss these developmental issues, these economic governance matters. So I think there's an opportunity that is being presented to us to understand what exactly or how exactly can we take advantage of our member states that are in these leadership positions, these convening positions, and make use of them. The African Union Commission is now an official member of the G20. At Aphrodite, we call it the G21, although publicly they'll not say that. But that is despite it not being a particularly democratic space, it's not being a legitimate group of countries, it is a very influential space. And if the African Union Commission is there, then it's upon us to start investing, writing to the African Union Commission and telling them, when you go to speak there, these are the things that you need to talk about. These are the things that you need to raise, because that's where wealthy countries also raise their issues. That is the space that gave us the uncommon framework. It wasn't the IMF, it wasn't the World Bank, it wasn't the UN, it was the G20, right? So it has its weaknesses, it has its issues in terms of governance, but it's a very influential space. So we can't ignore it. And when you look at South Africa is going to be the G20 president next year. So there's another huge opportunity there for us to pay attention in terms of what is happening. So yes, it may sound frustrating. It may sound like it's like we're pulling our nails out. But let us also be observant and see and appreciate that a lot of things are moving. Let us also invest time in understanding which member states are moving things in different directions, in different spaces, and put that investment there. I think even particularly in the trade area as well, in the trade space, when they're negotiating the texts, let's try and invest it, because I do think there's a lot of opportunities for us. We just need to find a way of positioning and mobilizing ourselves in those spaces. So I just wanted to add that a little bit to what you were saying.
Yeah, thank you so much. Yeah.
Thanks, Jane. Just a quick one, Jason. Actually, the C20 process is on, and those who are interested in joining, please let me know, because I am part of the working group. So it's another space in the spaces we are talking about.
Okay. Thank you so much, Honorable. So let us be positive. CEO.
Thank you, Jane. And I think what Jason highlighted, and Honorable also talked about the C20. I'm sure these are above the national level, because we also need to get our government in the right direction, right? In some countries, governments are really adamant. No matter what you say, they end up just doing what they want to do. We get that in a lot of countries. And this means, as we are looking at the regional and global level, let's also focus at the national level, right? Building the debt movement at the national level that can push governments. And I think this has to do with citizens that understand those issues. Because citizens, I always say this, when governments fail or when they become adamant, you know, we push back the ball to the people, and they can only make the right decisions if they understand these issues. And how do they get to understand these issues? The softer messages, you know, coming out of this technical discussions is very important. How debt actually resonates with the common person, it's very important, right? They may not know about debt to GDP, but someone who goes to sleep hungry, right, on an empty stomach, right, because of maybe a hardship, right, can connect with the messaging. And I'm sure at Aphrodite we are also already doing this with building the capacity of journalists to understand these issues, because they also have a very easy way of connecting these very technical, complex messages and breaking them down in ways that can actually inform and educate the people to actually engage in this, to be part, you know, to be that long end of our arm, you know, in pushing the governments to actually do the right thing, so that the national can then connect with the regional and the global to bring about the change.
Yeah. Thank you so much. And I think, do we have a session on mobilizing? And okay. So I think we need to have some longer session around that, so that the young people don't say we leave it and that's a no-go area. Yeah? And we are depending on you people to fight. We need to mobilize, we need to fight. All these spaces, mobilize from below, you know, and we can be able to do it. We can share so many successes, you know, so many, you know. So we need, don't give up on us, the young people, okay? So lastly, I'm concluding. I want to conclude with an issue which Honorable raised around the contestation, which we need to understand. You know, how did you put it, Honorable, the contestation between capital and labor, you know? And that's very important, because we are looking at capital on one side, the transnationals on one side, and the people and the environment on the other, you know? And capital is aggressively looking for profits at all cost, you know? So when you follow the money, everything we are talking about, you follow the money, you know what's happening, you know? But we need to fight. Thank you very much.
Thank you very much, Jane, for the wonderful, let's say, lecture. I think it's been an amazing afternoon session. I was just looking around the room, and I think most of us were awake. I didn't see anyone dozing up except for a few, but that just tells how interesting and how engaged we were during the session. So I think that's it for today. So we'll just wrap it up and prepare for tomorrow. Tomorrow will be quite packed, because we'll be in here from, I think, 8 until around 5:15. So just ask the facilitators to kindly share the material with me overnight so that I can share it out with everyone so that I can interact with them before our sessions. And finally, I don't think we can end the day without having something from Comrade Mkasiri. So he has a little something for us.
The music is coming, but this is just a small poem. Rob, probe the problem. As they rob, then they probe our problem. We have no capabilities, so they say Africa is in trouble because it borrows. It barely has anything to show for it except a wheelbarrow. So deeper into poverty, Africa is borrowed. Of course, they deny their culpabilities. That's it. So, can we have one love? I think we need some energy or survival.
Every man got the right to decide his own destiny. And in this judgment there is no partiality. So arm in arms with arms, we'll fight this little struggle. 'Cause that's the only way we can overcome a little trouble. Brother, you're right, you're right, you're right, you're right, you're so right. We gon' fight, we'll have to fight, we gon' fight, we gonna fight, we gon' fight for our rights. Not to trade it in a Zimbabwe, set it up in a Zimbabwe, mash it up in a Zimbabwe. Africans are liberate. Zimbabwe. No more internal power struggle. We come together to overcome the little trouble. Soon we'll find out who is the real revolutionary. 'Cause I don't want my people to be contrary. And brother, you're right, you're right, you're right, you're right, you're so right. We'll have to fight, we gon' fight, we gonna fight, we gon' fight, we'll have to fight, we gon' fight, fighting for right. Trash it up in a Zimbabwe, trash it in a